Thank you for joining us on today's episode of Tax Matters. I am Chiamaka Ohaochi. We begin with an update on the raging controversy on value-added tax between the Rivers State government and the FRS. The Federal High Court sitting in Port Harcourt on Monday, the 6th of September 2021, declined the request of the FRS for stay of execution of its earlier judgment, which stated that it is the Rivers State government and by extension other state governments that have the power to charge and collect VAT. Following the delivery of the judgment on August 10, 2021, the FRS approached the same court for a stay of execution of the judgment while also appealing to the Court of Appeal. It is the stay of execution that has been declined by the Federal High Court. Judgment of the Appeal Court is still being awaited. You can be assured that Tax Matters will stay on top of the matter and keep you up to speed. Welcome once again. There are quite a few stakeholders who make the wheel of taxation run smoothly. The tax authorities, be they at national or subnational levels, taxpayers who include individuals as well as big corporations and small corporations, trade associations and professional bodies. Professional bodies and trade associations keep the tax authorities on their toes, providing ideas and challenging actions and decisions of the tax authorities, if need be, with a view to enthroning a better tax system. In Nigeria, the Chartered Institute of Taxation of Nigeria is one veritable group that has consistently supported the growth of the Nigerian tax system. For 2 days, Thursday 12th to Friday 13th of August 2021, the movers and shakers of the CITN got together for a retreat to strategize for the Institute and by extension for the Nigerian tax system in the next 6 years. With the theme, agenda setting for 2021 to 2027 presidential years, developing the tax profession. The Council retreat featured presentations of reports by strategic agenda-setting committees, an overview of the Petroleum Industry Act, and a theme paper on the tax professional as a policy-engaged researcher, models, options, and strategies, which was presented by Professor Fatai Aremu of the National Institute for Policy and Strategic Studies, NIPS.
My responsibility this morning is to guide the discussion on tax professional as a policy-engaged researcher, which is a subset of the theme of the Council retreat, developing a tax profession in Nigeria. Taxation is at the center of the development of a nation. It is no coincidence that the countries with efficient and functional tax systems are the ones that are able to provide cutting-edge infrastructure and provide services. But in addition to that, there are also countries that are more transparent and more accountable in the utilization of public finance. So the centrality of tax to national development cannot be overemphasized. Another fact that we need to set from the beginning is that Nigeria's tax system falls far short of even the African standard. Tax to GDP ratio in Nigeria is 6.3 or 6.5%. African average is 16.5%. And global average is about 33.5%. There's a huge gap. So the tax system is grossly underperforming, even by African standard. What we need to do is, what is the role of the tax profession, tax professionals, and the tax professional body in redeeming or reviving and energizing the tax system for optimal performance.
Having laid the foundation, Professor Aremu returned to the topic of discussion.
How can a tax professional be a policy engaged researcher at the same time? This is the purpose of our sitting this morning. What we will do briefly before we move ahead, and this is quite important, is just to turn to our colleague. If you were to, in your mind, based on the experience you've had over the years in this space, if you were to reform Nigeria's tax system today for greater efficiency and competitiveness and all the various indicators of what a functional tax system is, what key intervention or initiative do you think, if this is done, we are going to have a better tax system? Okay, I am a professional, I'm an expert in this field. The system is not at optimal capacity. This is one thing that if we do this, we are going to get it. Of course, it's difficult to say if you do one thing, everything will be fine. But let's give it a shot.
And the suggestions poured in. Proper utilization of tax revenue, centralized database, willingness of leaders to pay adequate taxes, use of technology, getting the populace to trust the system, among others.
As we can see, the problems are just many, and one should not be surprised why we are where we are with respect to tax and with respect to the capacity of the government to finance policies, programs, and projects. So many of them. So we will bank these contributions we have made. We'll come back to it along the line.
Tax Matters spoke to some of the participants.
Sir, you're a member of the group working on the agenda setting for 2021 to 2027 presidential years. Now, I'd like you to give us, the idea behind this.
I think the starting point is always to look at the tax system in Nigeria. Everybody has agreed that it's not working. So sometimes what is difficult is not what are the solutions to make it work. It is really implementation. So almost everyone you ask knows that there's a problem. They can tell you what we have to do to fix it, yet we are not fixing it. Again, if you look at a body like CITN, the professional body about taxation in Nigeria, should be taking the lead on matters to do with taxation. Sometimes what we see is that, one presidential period is 2 years, and it's a very short period to make a meaningful impact. So what is really very interesting about this new approach is we want to set a strategy for a long period of time, like 5 to 6 years. And then we hand over from one to the other. And the way it's been structured is the committee is chaired by the vice president with full buy-in of the current president. So you're already guaranteed of the next 4 years. So some of us were invited to help in developing this idea. So the overall team we came up with is developing the tax profession. Part of the planning was, to then think about what in concrete terms do we want? What are we going to do to achieve what we want? By what time are we going to do it? What resources will we need? Who will be responsible for driving those initiatives? And how are we going to measure success?
The Institute has been challenged to be more of a policy-engaged researching institute than academic. What can you say about this?
I think that's the right position where we should be, because of who we are. We are actually regulators of tax practice. Our main focus should be on the policy direction of the country, because we're talking about Nigerian tax system. Also, our key stakeholders are the policy makers. We should be advising them. When we are into a policy engaged research, we will be looking at the solution, we'll be looking at the consumer of our advisory, and we are not just going to be coming to say, okay, I made this research, what is the impact, what is the result? So it will be easy for us to assess what impact we have made in the tax environment.
What gave rise to the theme of this conference?
Taxation in itself is very dynamic, and the institute that is saddled with regulating the standard of knowledge required to be a tax professional must also be dynamic. So if we agree on that dynamism, then of course what has taken us or what has brought us to this level, we know will not be sufficient to take us to the next level. That is the reason behind this retreat. We want to review what we have done and what we need to do to make maximum impact within the system. You know, the stakeholders look towards CITN providing solution to the myriad of problem across the nation. So to do that and to do it very well, we need to keep on learning, and that is the essence of this retreat, to set the agenda so that whoever will be the president in the next 6 years, we have a template of what to work with, not just personal agenda, but the institute agenda.
Mr. Adeshino Adedayo is the president of the CITN.
When you took office in June 2021, you laid down your goals and your plans, and now you've organized a retreat for the council members. What is the idea behind this team, and why is it called Presidential Years?
Actually, the idea behind the team is straightforward. We run a 2-year presidential system in CITN, and having come in as the 15th president, we have to create a strategic agenda that will cover the 15th, 16th and 17th president. In doing this, we realize that we have one overriding goal, and that is to develop the tax profession. While developing the tax profession, there are other people that we need to carry along. We have stakeholders. We have people who are our future members. We have the current members. We have stakeholders, state actors, non-state actors, and even development partners. We also have the private sector, people who are in the industry. And in coming about this profession, this is a profession that pervades a lot of entity. And because of that, we need to come up with a strategic agenda. We cannot continue with business as usual. The real truth of the matter is just like it is said. When you keep talking about having a different result, you need to change the strategy of what you have been doing before. And that is why we're having this retreat.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Thank you for staying with us. On this episode, we are looking at ways to improve the Nigerian tax system and generate more revenue for a better economy. It is not only the CITN or academics that are thinking about or strategizing on how to improve the system. The FIRS does this on a daily basis. The service is always on its toes, always thinking outside the box with a view to making the Nigerian tax system perform optimally and maximally. On the 25th of January 2019, President Muhammadu Buhari launched the Road Infrastructure Development and Refurbishment Investment Tax Credit Scheme, which kicked off the construction and rehabilitation of 19 roads and bridges spanning 794.4 kilometers across 11 states of the Federation. The scheme is a move by the federal government of Nigeria to incentivize private investment of over 205 billion naira into critical roads and bridges infrastructure nationwide. In return, the federal government, through the Federal Inland Revenue Service, shall issue tax credit certificates to the companies. Yes, tax credit certificate, not tax clearance certificate that we are all familiar with. Participants in the scheme shall be entitled to utilize the project cost incurred in the construction or refurbishment of eligible roads as credit against companies' income tax payable. On October 29, 2019, Dangote Cement PLC and the Nigeria Liquefied Natural Gas Limited received the first sets of tax credit certificates. On the second occasion and for the second time, tax credit certificate to the tune of 10,876,797,855 naira was presented to the NLNG. On Thursday, the 22nd of April 2021, yet another TCC was presented to the NLNG, while a week after, on Wednesday, the 28th of April 2021, Dangote Cement PLC received 2 tax credit certificates to the tune of 21.6 billion. This time, the second time for the company. As a further step, on Wednesday, the 14th of July 2021, the Federal Executive Council approved the award of new contracts to Dangote Industries for the construction of 5 roads covering 274.9 kilometers at the cost of 309.9 billion naira to be advanced to the company as tax credit. Our guest on today's episode is a chartered accountant, a chartered tax practitioner, and wait for it, a lawyer. Barrister Iro Okpai is the Director Technical at the FRS. He is on the program to shed more light on the Road Infrastructure Tax Credit Scheme. Good to have you on the show, sir.
Thank you very much.
I want to get an idea, how does this really work?
You know, the federal government cannot carry out critical infrastructure alone. The order is to request any private company, whether you are in construction or not, that can afford to assist in the provision of critical infrastructure, to come and participate in that project by applying and being admitted and getting approval to construct road. So far, those that have started and concluded something, or gotten something that you can say interim certificate of valuation given to them, is LNG and Dangote. LNG for Boni Opobo Road Channel and Bridges in Rivers State, and then Dangote for Kaba Obajana Kwara Ilorin Road and Ojota Oronshoki Road in Lagos. So these 3 projects are the ones that the service have so far given credit. You know, FRI report to Ministry of Finance coordinate the Road Infrastructure Credit Certificate Technical Committee, the people that review the project, review the cost of the project, review everything about the project before the committee gives approval. Not just that government have given private sector the right and leeway to construct road. The due process needs to be followed by ensuring that the cost of the interim certificate is reviewed, the cost, quantity surveyor cost is reviewed, the entire cost of construction is what it's supposed to be. There's no overpadding and there's no overloading. So when that is certified and verified, it is now sent to FIRS for us to issue the certificate.
Now, for clarity, for the sake of our viewers, like we've seen, let's take the NLNG for example. When they were awarded a contract that worth 120 billion plus, and we see that they come, like after completing a certain road, they are being given a tax credit certificate. After another one, they are given another tax, and they've received 3 tax credit certificates so far. So could you please take us through, because I mean it's a bit confusing. They do come and go.
In the first place, that there are no 2 certificates that are issued. In construction, normal construction, the cost is computed what they call interim certificate. As you do the project, The engineers, the consultant will value the extent of work so far done at any particular point in time.
Okay.
And you don't have to wait until the company have finished construction before you pay them. So as they complete a particular stage, you don't forget they are looking bridge and doing road and bridges. As engineers issue the evaluation certificate, then they prepare the evaluation certificate, they send it to the committee. The committee, like I earlier said, which is domiciled in the office of the Minister of Finance, with a membership drawn from various critical agencies, Ministry of Works, FRS, and other people. They are all members of the committee that looked at, in spite of the engineer certificate of valuation issued, we still have to re-verify the cost to ensure that whatever they are claiming is what they are supposed to claim. So it is based on stages. If they finish stage 1, and then they value the amount of work so far done, and then it is computed and they'll be paid. So far, they have turned in 3 valuation certificates. The first one, they received 14 billion. Second one, they received 10 billion. And the last one that was done in April was 20 billion. So far, Nigeria LNG have received a total of 46 billion from the 120 billion total cost of the project. And like I said, it is because it's something that is done on stage by stage. At any point you have completed a particular valuation certificate, they will value the extent of work so far completed. That's why it appears that they are getting it bit by bit. The Dangote have received, they are currently doing 2 projects. Like I said earlier, the Kaba, Abuja, and Lorin Road is being constructed at a total cost of 13 billion. So far, they have received over 10 billion naira because that one is going very fast. The other one, the Oroshoki Road, Papa Oroshoki Road, the one of Lagos, is also ongoing, and they are doing very, very, very well about that one. The work is going on, and they also paid in bit. The last payment they received was 21 billion in respect to the Jota Oroshoki Oshodi Road, based on the extent of work so far completed on that road. So because they are paid based on certificate of valuation, the amount of work, total amount of work so far completed, bit by bit, that's why they are doing that. So, but it doesn't mean that they have until they complete all the other contract they have before they take another one. Okay. Because the initiative is a very good, laudable one. Yes. I will thank Dangote for taking the lead. We also thank LNG for taking the lead. I also know that some other company, other people, MTN and BOA, they are also into the race. So very soon it will no longer be only Dangote and LNG. You are going to have other companies like BOA Group and MTN taking the road.
All right, sir. Now, we would like to know, what does this really mean for the service, the Federal Inland Revenue Service, and does it not amount to loss of revenue?
The revenue we collect belongs to the Federation, but the money we lose by way of credit, we'll get it by way of the economic boom arising from too much a massive expansion of sales and consumption. Yes. As you move for instance, if Dangote produce cement, or you produce yam, onions, tomato, or agriculture, steel, yes, raw material from one part of the country, I can't move it away. The demand is higher than the supply. Of course, you're not going to improve the economy, but the provision of critical road infrastructure, these goods will move freely to other areas where they are needed. We want to encourage many more companies to participate, so that it not just be a Dangote, LNG, BOA issue. If you know you can participate, so that you don't go home and say feeling that it is, come and participate. Come and help government, come and be patriotic by helping the government to provide critical infrastructure in terms of road. It may not be only road, but this particular one is road. Yes. So come and help build road. There are a lot of bridges that need to be constructed. There are a lot of roads that need to be constructed. Take one and build, and get tax credit and use it to pay your tax. So the tax credit will give it like withholding tax credit note. So you use it to seamlessly pay your tax.
Thank you very much. It's on that note that we thank you, Mr. Obai, for your time. We really appreciate, and we hope that when next we call on you, you will oblige our call.
Thank you very much.
It is certain that with initiatives like the Road Infrastructure Tax Credit Scheme, it is a win-win for all sides. We commend this initiative and recommend it to other capable and interested companies. And to you, our viewers, we know you are winners. To remain winners in the Ember months that just began, we enjoin you to put your vehicles in order. Don't overspeed, and if you must drink before you drive, drink water. There is nothing bad about the Ember months. Stay safe and keep watching Tax Matters. Bye for now.